Why do NAVs of debt funds fall? It is widely believed that NAVs of debt funds should not fall as they earn a fixed income in the form of interest. However, this is a myth. NAVs of debt funds do fall as the securities are marked to market on a daily basis. Consider a debt fund with an NAV of Rs 10. Let us assume its YTM is 8.24% per annum. This is the rate of return the fund is earning from its portfolio at the current value of the securities. Its expense ratio is 0.5% per annum. The return to the investor is accrual less expenses. So therefore, the net YTM is 7.74% per annum. This is what is known as the annual accrual for the fund. To determine how much the fund would earn on a single day, we will compute the daily accrual by dividing the annual accrual by 365 days. This amounts to 0.02% per day. This means the NAV of the debt fund should move up by 0.02% per day if the interest was the only source of return. The NAV after one day would be 10.002. Debt funds have to revalue their portfolios every day. The extent of volatility created by marking to market is measured by modified duration. Now let us assume that the modified duration for the fund was 350 days or 0.9589 years. Now if the interest rate changed on a single day by 2%, as it happened on 15th July 2013, the NAV would drop. This drop in NAV would be equal to the modified duration multiplied by the change in interest rate, or 0.95 times 2%, which amounts to 0.19%. That is a loss of 10 into 0.19% or 0.019 paise. The NAV of the fund would have moved up by 0.002 paise due to interest income, but would go down by 0.019 paise due to mark-to-market risks. The NAV therefore would be 10 plus 0.002 minus 0.019, which is 9.983. The net result is a 0.017 paise or 0.17% loss in NAV. The risk to the investor therefore depends on three factors: the yield of the fund after expenses, the modified duration of the fund, and the extent of change in interest rates. Due to the sharp rise in interest rates, the fall in NAV was quite steep compared to its daily accrual. Hence, the return for the fund turned negative.